Good morning, traders. Welcome to the official Trade Talk channel where I show you how I analyze price for the most consistent and higher probable entries to help you guys become better traders. So, y'all know what we're going to do today. We do this every Tuesday morning and Thursday morning. We're going to be looking for price action setups before the New York Open. I have not had a chance to look at my Forex pairs. Right here, Danny Ilkov says, good morning, Heath. I found a nice pitchfork connecting the low of 24 January with the high of February the 10th and the low of February 24th. Let's go look at what you're talking about, my friend. Let's move this out of my way. So January the 24th, that's going to be here. You said the high of that? No, the low of that with the high of February 10th. All right, let's do it. So this right there. Bear with me 1 second and then we'll get started. And then you said February the 24th. High of February 10. Right there. Boom. And then the low on February 24. So right there. Boom. Yeah. Yeah, you did pretty good. The thing is with these, it's like every other thing that is in technical analysis, except for price levels, it's all subjective. Why one would go there. I mean, I know why you did, because that's the stab low candle, so that high obviously meant something. But typically most people are going to go from like this low right here. You know what I mean? But I mean, it doesn't matter how you do it. There's no right or wrong way to do it. I'm sure there's some guy out there that wrote the book on drawing fibs that will say that's probably wrong. But I mean, basically all you're doing is you're creating cloned trend lines with a pitchfork. I just use the pitchfork because it makes it simpler. So yeah, I mean, keep an eye on it. As long as that low end right there stays intact, then it might hold. So right now, what we're looking at, obviously once we had this big nice move right here, we were targeting the yearly open price. 2 times this thing has not ran up to our target. It has fallen before it met the target. So the target is still intact. The target is still intact, and we still have a higher low intact. So basically, once you made the breakout, when you put in this downtrend, this section of price right here was the breakout. That's when you stopped the downtrend, or you broke out of the downtrend. Typically, that will be looked at as a bullish sign. So people will be looking to buy the lows. And then right here on this push lower, it is a very deep correction. So that basically makes you range bound, but it is still a higher low. So people are still looking at this until you take out that swing low as potentially a bottoming formation. But you can see here, once you put in this nice stuff, you sold completely off. You're down here into weekly support, that and monthly support. But I'll show you the weekly support right now. That's this candle. You know what I mean? It's just 3 weeks ago's close. So that's the support that's holding price. If I go over here to the monthly chart, you can see that you have a support right there. So yeah, yesterday we were trading under the monthly support. I'll go ahead and put it on there and go back out to the daily real quick just to show you what I'm talking about. So right here is that monthly support. And then down here is the weekly support. Yesterday you traded below that and then closed back above it. And then today you're seeing a little bit of bullish continuation. Now, what I was talking about to everybody on Twitter just a minute ago with that tweet is you can see how Bitcoin's putting in these swing lows. It is making lower lows and lower highs, but notice how there is no bearish continuation. That's the point that I'm talking about. Since you do not have continuation or momentum, see, once you break below a low, especially a big low, you should see momentum. You should see the market speed up and it drop quicker. Like every single low since up here, you broke it, then you had momentum down and you just kept going down. Same scenario with this low. You broke it, you pulled back for 3 hours, but then you've seen that momentum, that rip to the downside, establishing bearish continuation. What this price action is doing is it's establishing there is no bearish continuation. It is establishing what we like to call here at Trade Talk a 3-drive bottoming formation. I have heard other people call it the Wyckoff accumulation or Wyckoff distribution if it's happening on the highs. Now, with that being said, it is an hourly time frame. So take that with what you will. I have a bullish target of yesterday's high. That's as far as my bullish target goes, because every single time since this thing had that big fat rip, every single time it has been sold off. So when that's happening, you're in a range like this, you want to trade with the range. So I have a near-term daily target of yesterday's high at 1 a.m. Eastern Standard Time. You put in a fantastic entry for this bullish continuation. This is yesterday's price action. We were a little bit bullish into the New York session, and then boom, right here at 11 a.m., you set in that high. That took out this swing high and this swing high, and obviously you've seen more downside. But once again, even though you close below, you do not have any bearish continuation. There is no momentum. So let me show you over here on this one asset that happened yesterday, because we were looking for this this weekend during the members only live stream. Someone asked me what I had to say about Tesla, and what we were going to look for on Tesla was either this swing low or this swing high as our targets for this week. You can see that we gapped up on Monday, and then all day yesterday sold off, and then you close the day below the weekly target. So here is what I'm talking about. Here's the 5-minute chart. If I show you this is price action coming down. Once we took out the open of the day, we were no longer bullish. If this was going to be a bullish asset, right here is where you would have wanted to take the trade on this pullback. And then obviously you would have gotten stopped out with this candle or the bullish candle once you took out this swing low or wherever your stop was, right? If you're intraday trading, your stop's not going to be very wide because you're able to buy more, so you're levered up a lot higher, or you have a lot more margin on the table. You definitely don't want to be making wide stops, or you're just going to lose a lot more money. But you can see here, you took out the daily open, and then you had continuation, right? It wasn't just to take out the daily open and this swing low and then go back up. Nope, it was bearish continuation. Each 5-minute candle was making a lower close. And then you got down here to the weekly target. So if Tesla was going to be bullish yesterday coming into today, we would have wanted to see this hold as support. Now, just because you had bearish continuation doesn't mean that it will open lower today or continue to go lower today. But yesterday, this thing was not bullish at all. But this is what I'm talking about. So that's what you want to see when a main swing low is taken out, no matter what time frame. If you're looking at the daily, the weekly, the monthly, or the 5-minute chart, these things are fractal. So what happens on the daily happens on the 5-minute chart. It basically tells you the same. So this swing low, if you would have put in a shallow swing low and then another one, that would have been the same scenario that we're seeing on Bitcoin. All right, so back over here to Bitcoin. So basically what we're looking at that being as a potential, let's go back to the hourly, a potential accumulation zone for the next day, potentially 2, all right? So you have these shallower swing lows. There was your entry. Target would be yesterday's high or today's high. So if you would have taken profits based on the day's high, had you entered here, your stop would have been the low of that bearish candle. If you're taking an entry based off of support, which is the close of a bearish candle, then your stop wants to be underneath that candle's low. That's how I do it. I mean, you can figure out a way to do it yourself if you want, but that's how I do it. So you can see that would have been a fantastic 3-to-1 trade just if you were aiming at today's high, which is typically what we do. So taking this entry, once we started to trade up into the high, you've been scaling out your profits right there. You've been bringing your stop up to break even, and then you see what happens. This would be a secondary target. So that's what we're looking at right now. I don't know if we're going to get up there. Obviously, you have resistance But it looks like you're going to, because you closed this hourly up inside of supply. This is your supply zone. So since you closed that hourly up into supply, yeah, you kind of did take out the low of that candle. So yeah, the traps, I don't know. It just depends on how this candle closes. If it closes down here, then I would say you're probably going to see it roll over. But if it closes up like that, back above or around this candle's close, then that means you got more bullish momentum than bearish for the near term. But you have hourly res right there, and you can see how that is stopping your advance. Boom, boom, boom. 3 times to advance beyond resistance have been stopped. So I'm thinking you're going to see a breakout and a potential squeeze. I mean, if you get above this stuff right here, you could see Bitcoin rip back up a little piece. Now, here's the thing. Since we put in this nasty, nasty bearish candle right here, we're going to watch the midpoint of this nasty bearish candle to see if that holds as resistance. The basic way that I do this is I'll just take a fib from that candle right there, just so I can see where the 50% retracement is. As the 50% is not a fib level, it's just the midpoint of that candle. So I'm wanting to see if that holds as resistance. If not, then you could potentially see Bitcoin trade back up to 43,000 back into daily supply. So we'll see what happens. But I mean, all in all, you're in a range. You're in a range. You are building in a range. So when it's building in a range, you want to look to take shorts near the top end of the range, or take buys down near the bottom end of the range. You still have a long way to go before you're on the bottom end of this range. Since you have weekly and monthly support right here, you might not get down there. This might be where she turns around and starts to go back up to find more supply, because price trading higher and lower is price looking for supply and demand. Price is looking for supply. When it's moving higher, it finds it. Then it rotates back down to look for demand. Then it finds it. And that's how you build in ranges. And range-bound trading can be extremely profitable, especially when you have a range that goes from 34.3 all the way up to 45.3. $12,000 range. That's a big range. There's a lot of money to be made inside of this range. So we'll see what happens, but obviously you got daily resistance right there. That's going to happen before my bullish target. So, it doesn't have to hit there. But as of right now, you're still trading as an inside candle. So if we drop all these lines off here, you can see how this candle is trading inside of your previous day's candle. That is an inside bar or an inside range candle. All right, so not really anything. This was an outside range candle, so you should have seen continuation from it. Since you took out the high, closed below the low, you did, and you traded very much higher into this range. Then you got your continuation lower. So, I mean, it's trading very, very wicked, wild. It's stopping you out if you're looking at the very small time frames. It's going to be hard for you to find these levels. So I suggest you only watch your dailies. So you could do something like this, for instance. That's going to be resistance or potentially, and this is going to be support, potentially. So until you close a daily either under here or above there, you're in a very tight range for the last 3 days. So order flow is flat. All right. But as of right now, we're looking for yesterday's high to get taken out. It might not. It might stall right there at supply. So we'll see what happens. But right there is supply. All right. So you got a lot of resistance ahead of you. But I do have another target of yesterday's high. And that's pretty much it on Bitcoin. I mean, longer term, it's in a range. You've seen a lot of sell side coming in. This is the market pricing in rate hikes. As of right now, sorry about the white screen, but as of right now, you can see here you have a 95.9% of a 25 to 50 BPS rate hike. And that is target rate probabilities for this Fed meeting that's coming up on the 16th of March. Today is the 8th of March. So, yeah, it's coming and it's getting really close. and there's a 95% chance this is the CME Fed tool, right? The CME. This is the futures market pricing in what it's expecting, and what it's expecting is a 95.9% chance of a 25 to 50. So basically what that means is if you get a 75 BPS rate hike, then you will be above expectations. If you get a 20 BPS rate hike, you will be below expectations. The market is expecting 25 to 50. All right, so that could have been priced in with what we saw with this big move down. We were talking about it. Once we knew for a fact that the Fed was going to do it, we started talking about it October of last year. And then we coupled in with some technical analysis, and I was trying to get you guys out of the market up here, right? Hopefully you heeded that advice. All right, so moving on. For anybody new, I am bullish on Bitcoin. When I short Bitcoin, I'm shorting it on an inverse swap contract. So I'm accumulating more Bitcoin. So I'm essentially long spot, and I'm selling put options. That's basically what my strategy is with Bitcoin. I am as long as you can be, but that's 10 to 15 years down the road. If Bitcoin wants to go all the way back down to $13,000, I will short it all the way back down to $13,000. And if it wants to go higher, I will love that as well, because I am still long my spot and I keep adding to it. So we'll see what happens, but right now it's in a range, and you just have to play it for what it is. You're not expecting big moves. You know what I mean? You're only expecting what could be achieved. And right now, what could be achieved is yesterday's high. And we're all over that. So, all right, moving on. Let's go look at our majors real quick. Looks like we're seeing a bullish pop, however, so small on the euro. The euro is basically 62% of the DXY basket. So this is almost an inverse correlation to the DXY. We don't know if the DXY is super strong, causing euro to be weak, and we don't know if the euro is just really weak, causing the DXY to be strong. But we know for a fact that the DXY is strong, and the euro is absolutely disgusting. This was very difficult trading for the last couple weeks, last months, I'm sorry. When we took out this swing high right here, that's when I was a little bit skeptical, because I was bullish on the dollar. I was expecting the rate hikes, so I was bullish on the dollar. But when this occurred, I thought it was, a little bit not what I was looking for to happen anyways. And then it started to sell off, and then it came right back into the range. So this right here, this move is designed to do one thing, and that's to trap you long, all right? And it did that. You can see just how big of a rip you got. Once you got below this swing low, you seen momentum to the downside. So that's how you know when a move is bearish, not just a stop run. You had multiple times that you pierced that swing low, and then you got, a week lower. So looks like you are starting to get a little bit of a bounce. I'm not looking for longs on this, and I'm not looking to short it either. It is very extended. You are oversold on the daily RSI, all right? So when something's oversold, we don't look to trade it necessarily. If it wants to hold as resistance, we will, but that trade, in my opinion, will be tomorrow, because today you're bullish, and you don't want to short on a bullish day unless you got a massive resistance level, or you're coming into the 50 on the RSI or something like that. You're coming into a zone of potential resistance. BTC looking extremely bearish to me. Am I wrong? No, it has been bearish for the last 4 months, my friend. The last 4 months. Every time it gets a pop, it gets sold off. That is a bear market. That's what happens in a bear market. You get big bullish candles, you get big bearish candles. In a bear market, the volatility is a lot higher. So when the volatility is a lot higher, that means your daily candles are going to have a bigger range. They're going to be a lot bigger than they usually are. And just like you can have big, moves to the downside, you can also have rip your face off rallies in the midst of a bear market. It happens all the time. So that's basically what you're seeing on Bitcoin. You're seeing it generate liquidity by liquidating everybody, longs and shorts. until it finds where it wants to go. So like basically since we know that the rate hikes are probably priced in and this move lower was to compensate for that rate hike, a lot of people are going to be looking to get really, really bullish on the dollar and really bearish on Bitcoin and all that stuff. So we could see a buy the rumor, or not, it would be like a sell the rumor, buy the news, sell the rumor type of thing. So, but it's just opposite, right? The price has already moved for the rate hikes. So you could potentially see a bounce on the news. If it's a 50-point rate hike, even, you could potentially see a bounce. So just, yeah, I mean, trade the ranges. That's the best thing you can do. That's all we can do. We cannot know what price is ever going to do. So we trade the ranges. Here is the DXY. It's coming into two areas of old weekly support. This top one is a weekly supply zone. The bottom one is an old weekly support. The bottom one, which was the support, caught the close last week. This week, for the first portion of the week, you have seen another bullish move higher into supply. You can see that you are now below supply. So if this is going to have a correction back down to 97.11, we can potentially look for that, or longs on the euro, right? But they're just going to be day trades. There's no trade to take today, though. So what we'll be looking for is like the DXY to not close the daily above into that weekly supply. If it does close the daily, which you already have, and you can see that it's very, very risky to try to catch tops or bottoms, especially when there's that much momentum. This thing is flying. Oil is flying. I mean, you're green again today on oil. Just absolutely insane. A lot of this has to do with Russia, but it's not just because of Russia. Because look, you were going up a long time before Russia happened. This is because of Russia, but you were probably going to get that short squeeze anyways. Because in my opinion, price is going to do what price is going to do regardless of what news is out there, right? The technical trade was long on oil, just like the technical trade was long on dollar. And you can see it's working out. It's going higher. So we'll look for something to trade. Pound USD had a lot of momentum to the downside, but you could be running out of steam down here. Once again, hit oversold. There's nothing really to do on that. You can see today's range is a very, very small range in conjunction with yesterday's range. And it's disgusting. That's a big, big candle. So today's range is just a pullback. Basically, just a very small move higher. It's nothing really, right? Nothing. So we're just going to kind of wait. Because since it's so extended to the downside, it would make sense looking for shorts and shorting into resistance. So, I mean, if you think it's going to have continuation to the downside, you're trading into resistance right now, right? So basically, if you get an hourly close above that, the very next candle, you want to see it drop right back down. If you get another close higher, you're going to have bullish continuation, and you can trade as high as one spot 31,534. All right. So if you get above this and then continue a bullish continuation, I'd say it's probably going to trade up into this old support zone right there. Boom. So above this, there's where you're heading. If it rolls over, then you might be able to target 139.16. I don't like it, so I'm not messing with it. But that's what I would look for if I was interested in taking this one. 139.16 would be my target. Instead of looking for the daily low, since it's so extended to the downside and all that, I would only target support. I would start to get out of my position then. Pound yen, same thing, been selling off. That's due to pound weakness, not Japanese yen strength. Let's go look at the JXY. So, since usually in a risk-off environment, your Japanese yen index and your Swiss franc index will be extremely bullish. The reason we haven't got that this year is because there's a lot of other things going on. You have inflation with the US dollar. So it's called stagflation, right? Stagflation. When your risk-off currencies don't move in like they're supposed to. This is why I said the markets are always different. Just because something happened the last bear market doesn't mean it's going to happen this bear market. And you can see here that you got a nice push yesterday, then you, or not yesterday, but the day before, Friday, then you're right back down yesterday. So this is range bound. This is not bullish. It does look like it's trying to form a bottom, but the Japanese yen has negative interest rates. Negative interest rates. That's why their currency has been getting wrecked for so long. Right? So I don't know, you know what I mean? I don't know if that's going to happen this time. We've already seen a pretty big move off on the SPX, seen a pretty big move off on Bitcoin, and your Japanese currency is just playing around at the lows. So you have stagflation, so we're not going to look for the yen to be risk off anymore until it starts to happen. And you will know it starts to happen when, you know, all your yen pairs start to just crash. Right here on the SPX, you can see yesterday we got another push lower, another close below support. It looks weak. It looks very, very weak. A lot of consolidation and stuff down here, making it very difficult because you're stretched out a little bit on this as well. But this looks like it wants to go lower. If this is going to be a stab lower and a trap, I would not be looking to buy it or not be looking for that to happen. In fact, I would have a bearish target right there until proven otherwise. There is no area to get short on it right now because you can see how big yesterday's range was. But you might find resistance right where it currently is because that's an old swing low. That's your old support zone on the SPX, apologies. So that could hold as resistance today. Absolutely could. If not, you could test the wicks or back into yesterday's support. This one. So these are two zones to watch for potential support. If you get below this wick, since all of this happened, since it took so much time to go not really far, you know what I mean? That's because a lot of people are buying it and then the bears just prevail. If you get below this swing low, we would want to see like bearish continuation, like a good move lower, like down into 3950, 3900, somewhere down in there. That's where we would want to see it for us to get more bearish on it. Where are we at right now? You can see how your oscillator is just chopping around. You don't have a lower low on price yet, but you did make bearish or bullish divergence here with your lows. You can see you were oversold down there. Then you made another lower low, but on price, you made a higher low on the daily. So you do got a bit of bullish divergence going on here. And that's something to look for, right? It's something to look out for. Not look for, but look out for. So you don't necessarily want to get really, really bearish at the bottom of a range when you're seeing bullish divergence appear. So there could be something to it. Divergence is like everything else in trading. It works now and then. It just doesn't work every time. In fact, I don't know the percentages of how often it works or don't work, but I know it's low bullish divergence working and stuff like that. So what I use the daily RSI for, it's the only time frame I'm looking at it, is to see the momentum on the daily ranges, right? I want to know if something is very, very momentous to the downside. I don't necessarily want to buy it. When something's doing this, then I don't want to sell it either, right? So we'll wait to see what happens. I'm assuming that if you get back above 43.11, you're going to have a bullish target of 44.19, which will probably be different once I get the line up there. But this would be my bullish target if you take out yesterday's candle, because yesterday's candle is a stab lower and a weak close. So if you take that candle out, then anybody that got short yesterday will be stuck. And then you can see a nice little short squeeze move up. But those are your resistance zones. 42.18, 43.11 on the SPOOs. Let's go look at USDJPY because I think this was going to be a bullish opportunity. Yesterday or the day before, we were trading down into the 50 on the RSI. You can see that right there with that move lower. Bing. You can see bing, bing. It's having trouble down here. Now you're seeing that bullish pop with strong DXY and weak yen. this will move higher. Also, this will move higher based solely on the carry trade. Remember, Japanese yen has negative interest rates, and the US dollar come March will have positive interest rates. So that spread between interest rates from one currency to the other is called a carry trade. And it firms and big firms love to generate alpha any way they can. And just by being long USDJPY, especially when the rate hike happens, means you will get a positive return. You will get a positive return on that carry. And that's, in a zero interest rate environment, when you can't make money on anything, that looks attractive to investors. It's a positive alpha. So they will get long for that. Now, we were looking for that a long time ago. And this was one of my most excruciating trades of all time. Because in the Trade Talk Discord, we were watching for this breakout. Trading Views went and moved my lines. But we were watching for this breakout down here because of carry trade. A long time ago, we were looking for it because of the carry. But you can see when you broke out, it didn't really give us an entry. We would have wanted to see that daily close above. It was just very difficult to enter, so we didn't. And we missed that trade, and it was a good one. So we'll see. Does it have much more room to go on the carry? You're at the highs, right? So it's one of those things. I like it higher, but I hate buying an asset that's already had the move or a big portion of the move. But I do like it higher. You can see on the monthly that it is absolutely going higher. So keep an eye out for entries on that. Right now it's difficult because on the daily chart you're in a range. If you look right here, 1, 2, 3, 4, 5 weeks just trading in this slop. Just trading in that slop. So this was the range that you've been in for the last 6 weeks, counting this week right here. Very difficult to trade that, right? Especially because last week we took out support to the downside. If you take out that swing high, then you have a weekly trap and you're looking for bullish continuation. You're into resistance on the weekly right now, so the entry is not now. The entry, you got to let it pull back first. But just like the Aussie-CAD trade ripped last week, I'm expecting this thing to rip too, potentially. Same way. Let's go look at the Aussie-CAD, see what it's doing. I mean, that was a fantastic trade last week. You came into this stuff right here, and retail absolutely loves to short the tops, especially when you have a trend line coming in here that's been holding price down. Once I seen that and I knew oil could potentially pull back a little bit, I was all over this trade. We got long before the New York session, and we did it live. And we were doing it right here. We were watching this support zone right there. Got long testing it, and then boom, what a fantastic trade that was. I did close that trade down yesterday. We were like over in this region where I closed it because that was a big move. So a slow pullback, retrace 75 or 50% to 618 retracement levels. Then you could potentially see more bullish price action. The asset's bullish. If you look at it, it has been bullish 1, 2, 3, 4, 5 weeks. This big range was due to a short squeeze alone. And I assumed that was going to happen. I didn't know it was going to happen. I just assumed it was. And I didn't think it would go much higher than this wick. But you did. You smoked that wick, that wick, that wick, and that wick. Huge short squeeze. Boom. Fantastic. So that trade's over with. We'll see if it wants to find support for continuation. It's only bullish for the last 5 weeks. You are bullish on the RSI even on the weekly. So you're looking to buy this when it forms daily support. Right now it just hasn't had enough time to form that support. So give it a minute to pull back. Aussie-Yen is still bullish. You're still bullish on it. It just has not been, or was not, as bullish as Aussie-CAD was. Aussie-CAD was just primed. It was ready. This one, not so much. Let's go out here to the weekly. It has been bullish, though, for the last 5 weeks. So that risk-off move, Aussie-Yen, is generally, I mean, look at this. This was the COVID scare. Boom. Look at that. That's risk-off. That's what we were looking for to happen on Aussie. It just hasn't. Stagflation, it just isn't. So, I mean, it's still bullish. You are in the weekly res. This is a weekly. Let's go over here to the Oanda one because I do not like gaps. There you go. That's better. Weekly supply held last week. This week you opened Sunday night, moved higher yesterday, but then that yen strength popped up and you came back lower a little bit. So you're into weekly supply. That is where your resistance is. You also have daily supply right there. But what I would mark is, did that hold? It looks like it held also. Oh man, it's close. You're bullish on the day. You're crazy. You got high wick, low wick, and you're right on the open. You're bullish, so you would typically be wanting to look for bullish continuation. But, you know, let's see what happens. Just give me 1 second, because this might be something to watch. Let's get rid of everything. Bear with me 1 moment. Since you had a wick to the upside and then that wick to the downside, it makes it difficult in picking a target. So that's that's why you're bullish, because that's your open right there. High of day, low of day. So we're going to watch hourly Heath level right here. This is potential supply around 8, 9 o'clock. If we are unable to continue above 84,350, we may potentially look to take this short, but we'll only be aiming at today's low. We'll shed profits into support if it does work, but not right now. Right now, it's bullish. So wait for a test of the Heath level right there. If you're new to the channel, I call Heath levels demand zones and supply zones. It's just a coin that was termed in the CTM community. A lot of my subscribers are CTM participants. So right there, that's what we're going to watch. If that holds as resistance, then we may potentially have a short entry on our hands. You're not bearish, but this might have some follow through with it. All right. So we'll watch this for short side sets. It is bullish longer term. I understand that, but I think it needs a little bit deeper of a correction. An hourly close above 84,480 and you're scrapping the trade. You are not taking it. Right? If it closes above that line, even a little bit, you're leaving it alone. You're leaving it alone, because if it's going to be bearish, it should not do that. If it does do that, it should immediately put in a trap. So, yeah, just scrap it. That's the easiest way to go about it if you close above that. Ray says, what is your opinion on SQ or PayPal for long-term hodl? I like PayPal. I use PayPal. So, let me see. PYPL. I love PayPal. I mean, it's a fantastic thing, because I don't like to have my debit card out there all over the internet, or debit cards. You can see that this thing has been suffering lately, but so has a lot of stocks. But this has been getting absolutely pummeled for whatever purpose. Absolutely pummeled. So when something has that much bearish momentum, Ray, I would suggest just leave it alone. We were looking for this thing to find support over here. It didn't. Well, it did for 5-6 weeks. It was messing with this support, but then it eventually rolled over, and then look at the momentum you got with it. So your next support zone is here, and you don't want to see a weekly close below it, obviously. If you don't, then you could potentially start to buy some of it, not like a lot, and definitely don't throw leverage on it. You're just buying it to hold it. You're almost 70% off. Yeah, I think you could buy it. This thing, for most of its life, has done really, really good. But for some reason, up in here around July, this thing took a beating, and I don't know why. I'm not privy to that info. So you might want to do some research and find out why PayPal was so hot and then was so bad. When you give back all of your returns for since March 2020, like, this was the bullish phase of the market. This is when the Fed was buying assets. This asset purchases were on the table. They were providing liquidity to everybody. That's essentially telling you to get long. You have given back all of those gains. And this, let's see, is before October 21. So if it was in October 21 where you started to fall, I would say it's probably because the market knew the interest rates were hikes were coming. But you would think that that would be bullish for bank stocks. And since PayPal is a financial company, you would think higher interest rates would benefit them. So wait for the rate hike and then look to get long on this. I think this is going to be a buy the rumor, sell the news type of event. But again, once again, in the opposite fashion, since this is being sold off. It is being brutalized. And it's 70% off. It's a good company. It's probably going to continue, but make sure they haven't been losing a lot of money for some stupid investment that they decided they wanted to get into clean energy or something because the guy that runs the company is a Democrat. You know what I mean? Just do your due diligence, because there's a reason why this thing got absolutely beat up. Look at it. It's been nailing earnings. All these have been good earnings. And that's when the sell-off started. So you got earnings coming up on it in April. The last earnings call you had was a miss. All right, it was a miss. So, I mean, yeah, I like it. I like it for the long-term hodl. What you might end up seeing, though, is you might end up seeing this run down here and smoke this swing low before you go higher. Right? You might see that. So I would give it another week or two. If it finds support, then go ahead and pick up a couple shares. But if it smokes that low and then finds support, I would buy, more shares. And then just wait, right? Just wait, see what happens. It's not a bank, so higher interest rates might not help it. All right? And then let's go look at Square. This is the same thing. It's another internet financial company. Square basically is a payment system. That's what I use PayPal for. It's the same thing, right? It's for payments, and like payments that I have for internet companies. Like my music and stuff like that. I have to pay for that stuff so I can license it, or I have to license it in order to play it because the channel is monetized. So all that stuff I pay with PayPal. It makes it easier, and I can track it and keep it all under one account. So Square is similar, right? So yeah, it's doing the similar thing. It's getting beat up. This is your March 2020 pandemic scare, bullish because the Fed made everything super bullish, created a bubble of sorts. These things are coming off very hard. You tested your old all-time high, right? That's what you found support. You got a nice bounce. That bounce is being sold. So same thing. You might see this end up going a little bit lower. It looks like this bounce was at the old all-time high. Plus you had a good earnings. Boom. Couple of days higher. Boom. Right back into it. But this might be a demand. So watch this level. Near term, 94.99. This might be a buying opportunity. If this is going to be the very beginnings of a new uptrend, because this did break the downtrend. You can see it clear as day. I don't need to put a trend line on there. This pop got above the downtrend. So see if this area holds. You get a daily close into that demand zone, then wait for lower prices. Excuse me. I did not mean to do that right in the microphone. Yeah, but Square, PayPal, they're getting potentially ripe for long-term buys. Absolutely. I think so. As long as, like I said, both of them, as far as what I can see just by looking at the chart with the earnings data up there, They've been doing good. They're making money. That's what earnings is. It lets you know if they made money. If they didn't, this is the one quarter they didn't make any money. Even the last earnings session they did good. So one, mini earnings, they're doing good. I would just credit this sell-off to everything that's going on in the world, like everything else. You had a bull market for so long, and once the Fed said the music has stopped in October of 21, the music stopped. The markets know that. So they jump out of their riskier growth plays and they go into slower, easier plays, right? You're less risky. Where's value? Like, this is a growth stock. They're probably going into value. We got Vail. Look at Vail. Vail's a value stock. Look at this. So pretty much roughly around the same time that Bitcoin made its top, this made a bottom. And look, it's doing exactly the same thing that Bitcoin's doing, only inverse. Why? That's because we knew that interest rate hikes were coming. So this is a value play. It looks exactly opposite as your growth stocks. So that's basically what's going on. Value, same thing, really big move. AEP been getting absolutely lit up the last few days. This is a value play. AMGN, value. This one still hasn't gotten a big rip, so you might want to keep this one on the chopping block. It looks like we went lower than we were expecting, or we broke out and we've been trading higher. This is where we were, because when I analyzed this, that red bearish candle was the last candle. So you've broken out and you're holding it. But I don't like it. It looks like it's stalling out. So maybe if it comes back to 226.98, potential buy if it holds. But you get the point, right? The whole point is that's capital rotation. Stocks, people are rotating out of your growth into value. And also, that's why SPX is taking a hit. All of them. Dow Jones, everybody's getting a hit. Bitcoin took a hit because Bitcoin is a risk-on play. Tesla, let's go look at it. Oh, we looked at it at the beginning. I'll look at it real briefly again, but it was just just looked at it for a second. We were looking for either that weekly low to be hit or the weekly high, because we're day traders here, so we're only trading weekly and daily ranges. I do hold and own Tesla, but I don't trade it. That position is just a hold. Occasionally I'll trade it with options. But you took out the weekly low. So what I want to see is a gap up. If it gaps up and then starts to become bullish again, then you will have a near-term trend change. But the problem is you haven't made a higher high yet. You got to get above this stuff before you can say you've made a higher high. But is it going to be a higher low? Probably not. It just depends on what happens with the SPY and everything else. If the trend continues, then you're going to see more downside on these things. Tesla is an epic growth stock. One of the best ever. It's seen amazing gains. This thing's trading at $815 and it had a 5-to-1 split. It's insane. This thing has just been on fire. Once it broke out of this accumulation down here, it has been non-stop. Breakout, gone. So, it has been a fantastic investment, and it looks like investors are, taking profits, rotating their capital into safer assets. So we'll see what happens with it, but right now there is no trade on it, simply because you took out the weekly. You got to see what happens today. You do have well, no, you don't, not really. So daily support is going to be 764.04. That's your last and lowest bearish close. So that is potentially going to be looked at as support. Would I buy it? Probably not. You're in a downtrend. And you haven't shown me any reason to state otherwise. You're below all your major moving averages. You were above the 200. This purple line is the 200 daily exponential. You were above it for very so slightly. So you're probably going to see bearish continuation on this. You're under the 50. I mean, it's a bearish trade. I would be looking at it for bearish entries. Not bullish. Not yet. You got room to go to the downside on this one still. How much is it off from the all-time high? That's another thing I like to look at. I don't want to short anything that's off 80%, but something that's off 40%, yeah, there's still meat on that bone. You know what I mean? There's still plenty of meat on Tesla to get crushed a little bit harder. I wouldn't be surprised to see Tesla trading at $600 in the next month and a half, 2 months. Good morning. Good morning. All right, let me scroll up real quick just to make sure I didn't miss any important questions. Chart of the day. Nickel. I don't know nickel's ticker symbol, Danny. I don't trade futures, unfortunately. I got too much stuff to trade with Forex, stocks, and crypto. That keeps me so busy. I don't know if I'd even have time to look at futures. But yeah, nickel, I know some of them, iron ore, stuff like that. A lot of your commodities are skyrocketing right now, which is bad because of inflation, right? It's your dollar is less, and especially for working class citizens, they're the ones that suffer the most in inflation, not the rich, the working class, because your everything goes up and your your money just isn't long enough. So hopefully the Fed gets a handle on the inflation. That's the most important thing that we need to worry about as a country right now is inflation. It is bad. Very, 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 very bad. All right, we discussed that. Pitchfork. Yeah, just keep an eye on it. ETH USD, thanks. Yeah, let's go look at it. I haven't looked at ETH in a while, but the reason I don't really is simply because it's going to look almost identical to Bitcoin. It's going to be doing almost exactly what Bitcoin does. You can see here, except on this, your downtrend has already been played around, so that there really is no trend line there. Yeah, I mean, a pop is going to be looked at as a selling op. And, I mean, each time you get a bullish pop, it gets sold off. Bullish pop, sold off. Bullish pop, sold off. So ETH looks worse than Bitcoin, right? You still have a higher low on this as well, but your highs, I mean, you're wedging up. There's nothing else you can say about it. This is wedging up. Which way does it break is anybody's guess. But you're at the lower edge of the wedge. So that's similar. I mean, you're looking for that, right? Buy support, sell resistance. Buy support, sell resistance until you break. Boom. Or boom. Right? But it looks extremely bearish. It looks worse than Bitcoin. Because these lows, I mean, these highs are so much lower. So, like, once you put in that resistance, it held. You didn't even come close to testing it before you got sold off. And what I mean is this, right? That's resistance. So that's where we would have been looking for entries. Price trades up to it. Doesn't even get there. That's how weak it is. Doesn't even get there. All right, so now you got a new resistance level there. Price comes up. Sold off way before it gets there. Way before it gets there. And you're seeing continuation. Lower. So, I mean, if it's up to me, I would say as long as it's trading in this wedge, I would not be maybe looking to buy it. I would probably wait to sell it at the highs. Because you did take out support on this as well for 2 days. You closed below support this day and yesterday. So you got the close below support, then you got bearish continuation. Now it didn't take off, but you can see why. You're getting real close to support. You got another support zone right there. And then there. So there's a ton of support. I would just mark the lowest one and forget about the rest. This is support, and then the trend line, potential support. If you cannot close a daily above that, then you're going to be looking lower, probably by tomorrow. Remember, my trade on Bitcoin was only looking for yesterday's high to get taken out. But if you do that on ETH, you're going to be right into daily res. So that might be a good spot to look for shorts, right? You smoke the previous day's high, then you go right into resistance, boom, roll over. But we'll see what happens on it. It doesn't look good. There's no trade on it today. The trade was last night at 1 o'clock in the morning. Or if you want to short it, wait for it to get up to 2262202. I would wait for 2665 myself before looking to short it. And then I wouldn't necessarily want to short it because you're very bullish on the day. Not very bullish, but you get what I'm saying. Yeah, there's just not much to do in crypto right now, guys. I mean, it's getting beat up. Thanks, as always, for sharing your expertise, David. You are welcome, my friend. PredX says, it could be that we lost downside momentum briefly due to a large purchase from Eastern Europe. Due to large purchases from Eastern Europe. Now that it's done, we may continue to see liquidations. Yeah, I mean, if there were big purchases in Eastern Europe, that could absolutely be what caught Bitcoin support. Absolutely. I agree with that. Short term this month, how do you people feel about Bitcoin? Short term this month. Well, today I'm looking for higher prices. That could change tomorrow. The month is at support, right? If you're looking at the month and you think the month is going to hold there, and it could, absolutely. Next, this thing could trade up half point or midpoint for the rest of the month, come up into here, stall out, then open next month, push lower, test that again, then go higher and test resistance. We have no clue what's going to go on, but you can clearly see that you're in a range. This candle, you're still in it. This downside candle right here, you're still trading inside of that. This candle's inside of this candle, and then this candle's inside of that candle. So you're wedging up. You are wedging up. You broke out of the wedge and went lower. So, I mean, take that with what you will. You're at support, but this support can absolutely break. And if it does, then you might see another month of continuation down. The reason is because you had 3 bearish months. Then you had your bullish month. That's your pullback. Boom, boom. This candle is your pullback. This candle, as of right now, you got 23 days left on it because the monthly just opened 8 days ago. But you're seeing continuation. So that's support, and it may hold, but it looks like this thing wants to go lower to me. But we'll see what happens. So when it's like that, since you got 23 days left on the month, it's going to be difficult making near-term trade ideas based on that monthly support. So what I would do is I would watch the weekly support, right there, because as long as that is intact, as long as you're not closing Sunday below that, then you could potentially see bullish price action. See, you see this candle right here. This could absolutely be a bullish target. A lot of people see that as selling pressure, especially retail, because that's the way they're taught. You know what I mean? That's the way YouTube teaches people, that this is selling pressure. This is a pullback. This is a range expansion to the upside, found resistance, and you've pulled back. Yes, the pullback is a lot deeper than one expected to happen, but nevertheless, you closed green on the week. So you have to look at the next week potentially being a bullish range expansion. We had price action trading below the weekly support. If we were going to see that continue, you would think it would have once it got below it. especially once you took out last week's low. We would have been looking for price to continue lower down into this weekly support right there. So trading these intra-week and intraday ranges are for the professionals. Very weak. I mean, you're ranging at the lows. It looks like a bear flag or whatever. But this could be a potential bullish target because it is a pullback. If you get below the weekly open again, I would stop being bullish, right? For this week. This week may just trade sideways inside of this candle's range. We never know what price is going to do. But we opened higher, or we opened right where we closed last week. We had our initial push lower, which is, what we're looking for, because this is the way candles work. You have your open, then you'll have your first impulse move, then boom, right? That's what they do. That's what we look for. And a bearish candle looks like this, right? That's what they do. So that's what we're looking for. And as you can see on this weekly candle, you've already had that run lower. Now, it doesn't mean it's 100% guaranteed that he said we've already made that initial run lower. The rest of the weekly is going to be going higher. Monday, Tuesday, Wednesday, Thursday, and Friday is going to close higher, higher, and higher. I'm not saying that. But we had that initial run lower. So now we're looking for this. That's what we're looking for. Until we get back underneath that weekly support. If we get back underneath that weekly support, then I say screw being bullish. Hopefully that helps. Short term this month. Oh, that's the one I just read. All right, guys, I'm going to have to wrap it up, unfortunately. I know I didn't get through any of your guys' comments down at the bottom, but hopefully it was a learning, valuable session, as always. But yeah, we're going to continue to look for that. We're going to watch those, that weekly support zone the rest of the week. So you guys make sure you trade safe. Make sure you trade. Wait a second. Check out wheat futures. I don't know what futures ticker symbols are. Wheat F. All right, I'll look at it real quick. Wheat future. Yeah. I mean, that's terrible. That's your bread, right? That's your flour. That's your bread. That's your muffins. That's your bagels. That's your pizza. It's terrible. It's absolutely terrible. That wrecks the working class. It is insane. Especially, it's you know what I mean? Inflation. This is what happens in inflation. It's sad to see, but it is what it is. There's nothing we can do about it. I wouldn't be trading that, obviously. I mean, that is just insanely bullish. There's really nothing to do on it. I mean, this day just opened and closed. It didn't even have a wick on either side of the candle. It's just disgusting. And then there's your short squeeze. There's your potentially your blow off candle. I wouldn't try to short it if you are trading futures because it can go higher. But I'd say if you watch on the smaller time frames, if you form like an hourly res, this thing's disgusting, man. Look at that. There's no liquidity at all. Or that's probably the cash close or something. I don't know about futures. Is weird. Futures are weird, but there's hourly res on it. If it holds, you could potentially look for a pullback, and that pullback, I would just be looking for that low. That's as low as I would look for a pullback. If it holds hourly close above, obviously you're going higher, because short squeezes tend to continue because the dummy's trying to short the top. All right. That's what causes squeezes. All right, you guys make sure you guys trade safe. Make sure you trade smart. And as always, happy trading, everybody. It's time to look for some setups. You guys have a fantastic day. We're going to look for Aussie-Yen to see if it wants to find resistance. That's pretty much the only thing I see in the Forex world that I like. Maybe something else will happen after I get off the live stream. We'll see what happens. Make sure you guys be careful out there. It is a very volatile time. It wouldn't hurt to use smaller risk. If you're usually risking 1%, drop it down to 0.5%. Because if the candles are bigger, then that means they're going to move further. So just be very careful out there, you guys. We'll talk to you Thursday morning, same time, same place. Have a good day.